In today's video, I'm going to be answering the question, which one is better, support and resistance trading or liquidity trading? Now, the simple answer is they are both exactly the same. In fact, I would say support and resistance is better. And this is the reason why I believe that. If you've been watching my videos recently, you will know that I've been talking and trading a lot with Liquidity and the binary destroyer. Now, the reason for this is simply because a lot of you lot keep asking me, can I show you how to swing trade with the binary destroyer? And to do that, we need to talk about liquidity. Now, my style of teaching people is very simple and basic. I like to get straight to the point and tell you the truth. When it comes to trading, there are three main skills you need to learn first. Everything else, every strategy or other skill, stems from these three skills first. And they are candlestick patterns, support and resistance, trends, pullbacks, higher highs and higher lows. You have to learn those three skills first if you're ever going to be successful on the chart. Everything else stems outwards from that. If you want to perhaps trade Fibonacci retracement levels will not work if you don't know when a trend is happening and a pullback is forming. When you get a pullback forming, you would bring up a retracement tool, a Fibonacci retracement tool, and that will tell you when a pullback is about to end and a trend continuation is about to happen. If you don't know how to identify a trend and pullback, Fibonacci retracement is totally pointless to you. This is the same if you trade liquidity. Liquidity trading will not happen if it wasn't for support and resistance. There will be traders out there that tell you that support and resistance doesn't work, it's for retail, and all they trade is liquidity. I hate to break it to you, but if you are liquidity trading, you are trading support and resistance. The reason being is because liquidity forms around support and resistance. If price comes down to a support line, everybody's buying from that support line. They put their stop losses below it, which forms liquidity, and you would buy when that liquidity gets taken. That liquidity would not be there if that support line wasn't above it. Okay, so if you are trading liquidity, you're trading support and resistance. So you have to understand support and resistance first. You got to be able to spot it on the charts to be able to spot where liquidity is going to be. Now, which one is better? Which one is gonna, I don't know, make you more money? To do that, we need to jump on the chart. So let's go. At the end of this video, I will put a clip of me trading liquidity with the binary destroyer. So if you stay to the end, you get a nice little treat of watching me trade. Now, in trading, there are loads of different reasons why the market moves and loads of different ways on how to make money. There is no set way on how to make money or set way on how the market moves. There's a famous saying, and that is, there's plenty of pips to go around for everybody. There's plenty of money to go around for everybody. In trading, there's two real main types of trading: scalping and swing trading. Scalping is normally when you're trading the lower time frames, going for in and out pips as fast as you can. Swing trading is normally done on the higher time frames, and you're capturing big swings in the market, normally going for big pips. Each style of trading has their advantages and disadvantages. Now, if you are scalping the markets off the lower time frames, support and resistance is amazing. If you trade with the trend on the lower time frames, trade support and resistance, wait for break and retouches, trust me, it's very profitable. I've done it for 5 or 6 years now. If you are swing trading though, support and resistance is not enough for you. You have to start looking at liquidity as well. And I'm going to give you an example why on Euro USD just now. Okay. Now, if we just zoom in on Euro USD. Okay. And I'm going to mark up this area just here. Okay. As you can see, I'm just going to, you know what? I'm just going to pop this here. I'm just going to pop this here like this. Okay. That's better. Just here, right? Let me explain to you which one's better, because there is no which one is better. They're exactly the same, okay? This is the 1 hour charts on Euro USD. As you can see here, price has come down to a support line, okay? And for quite a while, it's bounced off it, okay? So you can argue it's done a double bottom pattern, or it's come down and bounced off it various times before breaking. If you are scalping, this is an absolute beautiful setup, because if you're trading off the 1 or 5 minute time frame, you'd be looking at the 15 and 1 hour for support and resistance. Okay, so if we were to look at this setup on the 5 minute time frame now, let me find you that setup here. You can see here we've got a beautiful nice little scalp from this support line. Okay, see prices come down. Perhaps if you didn't buy from this support line at the time, you waited for the retouch, and again this move from this support line here is around 19 pips from the second entry point. If you entered here on the first, you would have got around 26 pips. So if you're scalping here, this support line was perfect. Absolute beautiful setup, minimal drawdown. If you perhaps had a 5 or 10 pip stop loss, you could have easily got a 1 to 4. Easy, nice, beautiful trade. And that is scalping from the 1 hour support line. Very simple. Okay, now if we just get rid of this support line, or we leave the support line, okay, and we wait for this break and retouch just here. So you see how eventually we broke this support line just here, and we come down and retouched it, and we took a sell here. This was a beautiful trend strategy entry point. This is a beautiful trade with the trend. So if you're scalping here, you would have made nice money. If you trade with a trend here, you would have made nice money, because you would have sold here on the break and retouch, put your stop loss here, and again minimal drawdown, and this trade would have returned around 31 pips. So again, if you had a 5 or 10 pip stop loss, 31 pips, beautiful. Well over a 1 to 4 here. Really good trade with the trend. So you can see here, if you're scalping, you would have made money. If you're trading with the trend, you would have made money. But if you want to swing trade, you cannot buy from this support line. There's a very good reason for that. When you are swing trading, okay, you normally have to mark up your support and resistance on the 1 hour, 4 hour, and daily. Now, the problem with that is simply because on the higher time frames, when you draw your support and resistance, everybody else sees that same support line. My dog, my mom, my cat, my rabbit. I don't have a cat. I don't know why I said that. My rabbit, my goldfish. Everybody can see that support line. If this is the 1 hour charts, right? It took hours for price to come to this support line. It took hours for price to kind of fluctuate and then break below it. Okay, so this here was just building up liquidity. Everybody else seen it. The banks, the institutions, the retail, and like you and like me and everybody else, we know everybody is buying from this level, and we know everybody is putting their stop losses at this level here. Yeah, everybody knows that. You've seen it happening hours before. If you're scalping, fine, no problem. You could be in and out the market faster than anybody else, and you can make your money, close your computer down, walk away. Great, I've made a 1 to 4. You know, I would have made 30. Oh no, not my phone. You made 30 pips from this scalp. Beautiful. But if you're swing trading, going for 200 to 300 pips, you can't trade support and resistance. You have to start to introduce liquidity. Okay, so to trade liquidity, believe it or not, is by far the most simplest thing I've actually ever taught people. Is just, if there is a support and resistance line on the higher time frame and it looks really obvious, you know, if you can just load up a currency pair and you see the support and resistance line and it's like bang, there it is, look, support line, just simply wait for that area to be broken and then buy from it. That is it. That is trading liquidity, because that support line wouldn't happen if this liquidity wouldn't form if that support line wasn't there. Okay, so with this setup here, if you scalp, you would have made money. If you waited for the trend break and retouch, you would have made money. And if you were swing trading and you waited for the break to take out liquidity and you bought here somewhere, again, you would have made 200 pips. So everybody's winning at this setup. This is one setup and everybody's winning. Scalpers, swing traders, trend traders, counter trend traders, people that trade double bottom patterns. Everybody makes money here. But it's about understanding your style of trading. If you're scalping, Support and resistance is perfect. In and out, in and out, in and out. If you try and swing trade with support and resistance, it ain't going to work for you because price is going to get manipulated. If you want to swing trade around support and resistance, you have to wait for it to be broken and then enter the trade where the banks would enter and swing trade up. And that's pretty much it. There is no right and one way on how to trade. It's just about understanding your style of trading. I said to my BD member the other day, you scalp from support and resistance and you swing trade from liquidity. Okay, so you scalp 20-30 pips from this bounce. You wait for the break and retouch. If you're smart, you could sell on the way down. I mean, that would be really good. That would be a really good trader if you could scalp 30 pips from the support line, wait for the break and retouch and sell with the trend, and then wait for the liquidities to start coming into play, and then buy the swing move to the top. Beautiful. So yeah, so there is no right and wrong way on how to trade liquidity or trade support and resistance. It's about understanding your style of trading. And mine scalping, I will continue to trade the 1 and 5 minute time frame with support and resistance, and occasionally when I wait for a break of that support and resistance line, I might take a cheeky trade as well. So I'm making money scalping, I make money swing trading. So yeah, hope you enjoyed that video. This is a breakdown on a trade that I'm just about to take on gold. So gold has, on the 1 minute time frame, just pushed up nicely into a level that I've been watching for quite a while. I'm just waiting for a Mogwai signal to appear. Obviously the MACD's just peaked up overbought, but will start to kind of turn now as price turns back down into our favor. Now, the reason why I took this trade, okay, or the reason why I will take this trade, shall I say, if we just go to the 50-minute charts, you can see that price has been in a downtrend for a considerably large amount of time. So we've got this kind of trend down pattern, pullback, trend down, pullback, trend down, pullback, a area of resistance. Prices then trended down, pulled back, trended down, pulled back, trended down, and we've had this big push up here. Now, if we just keep an eye on this 15-minute charts, you can see that there is an area of resistance just here, okay? And price has now peaked above it, and it looks like liquidity has been taken or is currently being taken. So obviously everybody's looking at this thinking, okay, downtrend, downtrend, downtrend. Let's sell. Where are they going to sell? They're going to sell here. They're going to see the break and retouch. They're going to look for a sell opportunity. And again, if you took this sell opportunity here, you would have made a considerably large amount of money, and again, we retouched it here. And again, if we sold here, we would have made a considerably large amount of money. But the problem is that, yeah, scalping here is going to make us some good profits, but swing trading isn't, okay? If we want to enter swing trades at this level, then we need to be entering just above it where the institutions are going to sell. That's where we want to be taking our sell trades. So if we just go back to the 1 minute time frame now, we should hopefully start to have a Mogwai signal at this level. We haven't quite got one here yet, but when we do, I will be taking a sell trade. And yeah, like I said, that's pretty much what it is. Probably going to pause the video and I'll come back in a few minutes time once I get a Mogwai set up. Okay, so we're just about to pop a Mogwai setup. So I'm waiting for price to come down, and then we're going to pop a Mogwai signal. Let's have a quick look at the 5 minutes. Okay, 5 minutes is up there. I'm just waiting for that Mogwai setup to appear here. Hopefully it should appear in the next kind of 1 or 2 candles. It's just playing a game of patience now, waiting for that Mogwai signal just to confirm our sell position. And then again, what I'm going to do is break down the setup again. Once we're in the setup, I'll explain to you where my target is, stop loss levels, and everything like that there. So I'm just waiting for this. I'm just waiting for 1 minute to go here. Hopefully the next candle that appears will actually produce that Mogwai signal. There we go there. So now I'm going to enter the trade. So I'm going to enter, you know what? I might actually stack I might stack 2 trades on there, 2 trades, okay? And we're going to watch the trade now as it comes nicely into profit. Now, we're just going to scalp the market here. We're literally going to get in and out. That's my style of trading. And the reason being is I just want to show you the kind of setups that appear around these levels. So now let's break down the setup again. So if we, obviously on the 1 minute time frame, we've got the Mogwai signal, the MACD's gone overbought, okay? The only thing that I quite don't like is the TCA lines come out, but the reason why this is happening is simply because of the liquidity sweep that's happening. Again, if we go back to some naked price action, so from the 1 to 15 minute charts now, you can see that level here, okay? And you can see that everybody's now being took out, you know, everyone that, just probably put it just there. There we go there. As you can see now, let me just check an eye on the trade. Okay, trade's going in nicely into profit. We should get minimal drawdown here, which is good. These kind of setups are great. They just go straight into profit and hit our TP without no problem. So as you can see here, you know, it's kind of prices in a downtrend. You can see it's creating lower lows and lower highs. Very simple liquidity setup. Lower lows, lower highs, everything. Okay, it's a downtrend. And we've got this nice little break and retouch at this level here, okay? We've got this nice little break and retouch. So again, a lot of people would be selling here. If you're going for, you know, 5, 10, 15, 20, 25, 30 pips from this level, no problem whatsoever. If you want to target 200, 300 pip move, then obviously, you know, you can't enter on the support and resistance alone. We need to be entering where the institutions are going to enter, and that's going to be around this liquidity level here, where everybody gets stopped out. We take our sell positions. So it's about identifying the levels that is holding liquidity, then waiting for price to tap into it, and then take the trade down. So quite simple trade. You know, if we just go back to the Mogwai strategy now on the 1 minute time frame, we just pulled up slightly, but again, we should easily hit take profit on this. So what I'll do is I'll pause the video and I'll come straight back once take profit has been filled. Okay, update on that gold trade. I'm just about to close it off at TP now. As you can see here, price kind of consolidated for a bit and now eventually it's pushed down. Now we could have a big target on this. We could target perhaps 1,000 pips. I mean, the current trade is sitting at around 252 pips, but to be honest with you, I'm just going to close it off early now. I'm actually in the process of just having some lunch. You can't hear it, but my soup is in the microwave, so I'm going to leave that there. As you can see here, nice little liquidity scalp on gold, and yeah, beautiful setup, and I hope you enjoyed today's video.